Let's talk also about what's happening with the driver of this right now. One of those key catalysts, Nvidia's annual GTC event is underway with CEO Jensen Huang, the poster child of artificial intelligence, set to speak just in the next hour. So let's break it all down with Wedbush's global head of technology research. You know him, colorful as ever, Dan Ives. He has an outperform rating and a $175 target price on those Nvidia shares. Notable bull, especially in technology. Bullish as your outfit right now. So let's talk about whether or not Jensen can deliver the goods at GTC this afternoon.
I think it's going to be a watershed event. I mean, I think when you hear from the godfather of AI, Jensen, he's going to lay out what demand looks like for Blackwell. And ultimately, I mean, right now, we believe 15-to-1 demand to supply. You know, in terms of what we see for Blackwell. It's about not just things like in terms of Rubin and others, physical AI, autonomous robotics. And I hear everything that Josh is saying, but in my opinion, we are in year 3 of an 8 to 10 year build out for the AI revolution. And that's why it's so front and center what we're going to hear from the godfather of AI, Jensen, you know, in San Jose.
All right, so Nvidia shares have now pulled back notably, not as much as other mega cap technology stocks have, but a lot of it was driven by kind of the recent quarterly reports that have come out. The fundamentals are very much intact. Nobody's going to dispute that. But the question is relative to expectations, and that's where Nvidia ran into some problems with its most recent numbers. They're still growing, and by a rapid clip. But why are analysts then so much more bullish where they cannot meet exactly or exceed a lot the expectations that are out there?
I think it's a digestion period. I mean, I think we go through the next 4 quarters, you're going to ultimately see, I think street numbers are going to come up 15-20% over the next few years. I think buy side definitely is very negative here, but as this all plays out, I think it's a stock that has a 2 in front of it. Because the AI revolution, remember, despite DeepSeek in terms of everything we saw there, with some of the Cinderella story in terms of some of the fears in terms of Nvidia on the chip side, there's one chip in the world fueling this, it's Nvidia.
This is the cheapest you have been able to buy Nvidia stock since October of 2022, before the launch of ChatGPT, which set off the AI era. So Nvidia in the AI era, as the leading player in AI, has never been a better bargain than it is today. The stock is, the company has 52% growth expectations for this year. It's now a 20 forward PE. How insane is this market right now where they would rather buy Walmart at 30 some odd times earnings than this at 20? Walmart, if they're lucky, might be growing high single digits this year.
I'd say in 25 years doing this, I can name, so I count the times that have been almost the generational opportunities relative to what the stock's doing. That's where I think Nvidia is here.
I think this is a generational
I think because my view is we're going to be talking about Nvidia 4 trillion, 5 trillion over the coming years, despite near term, you know, in terms of political export controls, everything else. That's where this is going. We're talking about 2 trillion of AI capex next 3 years. There's only one red phone that you could call to get those chips. It's
you want to laugh? You know what he should announce at GTC? How about a buyback? I think that would probably do more good than any technology.
Okay.
I mean, it's really, at this valuation, should be shrinking the float.
All right, so speaking of the valuation kind of construct, the paradigm that we're in right now, Joe, if you look at the way that it's been described on the forward basis and the valuation that's out there, there is a balancing that's happening right now about whether or not it is the fact that the analyst consensus, the forward earnings expectations for Nvidia are relatively off, or whether it's the price that you pay for those earnings that is relatively off. Do you think, though, that this is the equilibrium point at which the analysts are more correct when you project earnings out in the next year, and is the market valuing those forward projections properly?
So unfortunately, I have to give you an answer that is not succinct, and it is dependent upon the CapEx. And the question ultimately becomes, does the macro environment begin to arrest the capital spending on the part of those big players? And if in fact that unfolds over the coming year, then when you think about where Nvidia is, I think it has the potential to cheapen its valuation.
All right, Dan, if that is the case, the people who spend the most money with Nvidia are hyperscalers. These are the most ginormous balance sheets in the history of corporate world. what does the CapEx picture change by? How can it be affected by a hypothetical weakening macro backdrop?
Yeah, and Joe brings up an awesome point. I just tell you, come back from Asia, it's actually accelerating. In terms of, we see about 70% of that CapEx actually accelerating because it's an arms race. In other words, you have $325 billion that's going to be spent by big tech, $100 billion year over year. You don't even have the sovereigns. You don't have the rest of the world. This is something where I actually think the industry is underestimating CapEx, and I get the point in terms of worries about macro. I actually see more and more big tech accelerating in terms of, because as this arms race plays out, whether it's M&A from we see Alphabet and others, no one is pausing. They're actually accelerating. I think that's going to be the key. And I think that's something you're going to hear from Jensen, on stage.
Can I say one thing on this really quickly that I think is important? It's not definitely the case that CFOs are going to look at AI-related CapEx as a cost too high in a recession, because we're about to have an IPO. Klarna is coming public. Klarna fired everybody, and they're basically operating customer service on AI. That's the story that they're telling at their roadshow. This might be like the poster child for how much money a corporation can save in staffing costs using AI. So it's not a foregone conclusion that a weaker economy necessarily means slashing CapEx. They might actually look at this as a way to get through a recession.
I would say that when you're driving down the floor to go to the Final Four, this is the jump shot you take 100 times out of 100 times, buying Nvidia in this market at this multiple. And I'll give you two reasons. Really, from the macro standpoint, the survey data has eroded very quickly, historically quick. And that's the uncertainty that's within the market right now. That's the uncertainty that the administration's brought. But I think it's been so quick of an erosion that it's flushed out. And you're starting to see that. I think Atlanta Fed GDP is going to swing back for a number of reasons. And the other side is there's a bigger story. Yes, there's competition with the LLMs, and you're going to see new chat GPTs drop. It's going to be DeepSeek. It's going to be something else. There's going to be another instance. But it's bigger here where you're the robotics story. You're also looking at the software. There's no second. This is their competitive advantage. That's their moat. So this is where I want to buy.
All right, guys. This is Nvidia conversation can go on forever. Let's move on here now. By the way, Nvidia CEO Jensen Huang will be sitting down exclusively with our own Jim Cramer tomorrow at 10:15 a.m. Eastern Time.